You have a bit of money stashed away, and you're starting to consider to buy some real estate as an investment. Is that a good idea? What should you be looking out for? And will it actually give you a return? It is one of the more popular ways for people to invest any additional money that they have. I think it's something about having a very, very tangible asset, right? You can touch it, as opposed to stocks and bonds where it's far more abstract. You know that your name is somewhere in a contract and that you have that ownership, but it's not the same. On the other hand, you also have plenty of horror stories around real estate, like bad renters or damaged properties or whatever else comes up. So should you even invest in real estate? I don't have enough knowledge to give you that answer, but I did contact someone who does know more about it. My old study pal, Tim Leysen. He's now a real estate expert and also a lecturer at one of the universities in Belgium on the topic. We had a really long conversation of 40 minutes, and so this is part 2 out of 2 of this conversation. Here we look more at the real estate as an investment asset, and in part 1 we looked at the real estate for private use. You can also go check that out after this part. I really hope that you enjoyed the conversation. Here we go. What are for you the general requirements to become a landlord?
Well, if you want to become a landlord, you first have to become an investor. You need to be able to make the financial calculations of your rental return. I think that's the most important thing. Secondly, one needs access to capital and access to a bank in order to leverage. You can always buy it with 100% cash, but once you go into a real estate, the leverage aspect might be very interesting for you. If you have 500k, why not invest it in 2 houses with an upfront input of 250k and finance all the rest? That's what I mean with giving you leverage. Anything else? Yeah, it depends a little bit on the legislation of the country you're investing in. Certain info and permits might need to be in place before you can rent out, but I think being an investor, making the financial calculations, capital and loans, that's the most important thing.
Is it still worth buying a house for renting out?
Well, specifically a house. There's a difference between the question, is it worth buying a house for renting out, or is it worth buying real estate for renting out? If you say, is it worth buying real estate? Yeah, real estate does give you a kind of fixed income. Additionally, that fixed income is protected against inflation because in most countries, the rental income does go along with the evolution of inflation. So you have actually an inflation hedged investment. Specifically, when the question is it still worth buying a house for renting out? Well, that's something a little bit different because I don't doubt that you will find tenants for renting a house. They're often quite numerous. Everybody wants to rent something with a little garden that is independent. It's still the dream of most people, I think. However, the price that you pay for a house is usually much higher than when it comes to apartments. While the price is a lot higher, the rent can be set higher, but the difference between both is not exactly the same. Let's say that the difference between the apartment and the house is about 15%. The difference in rent is not always 15%. You will actually pay. The idea is that for a house and for everything, you pay for the square meters. A house is often bigger, so you will pay extra for those square meters. But they don't impact your rental income in the same way. You might pay 100k extra for the house, and that might give you 200-300 euros per month more, and that's about a small 4k per year. But yeah, 4k compared to 100k, you see the difference is quite big. Yeah, the tenor to get the return of 4K for 100K is about 25 years. So it's not always interesting to rent out a house unless you can buy it very cheaply. At the end of the day, it all comes down to the return. You want to buy a house, you want to buy an apartment, you get rental income, okay? You have certain costs, maintenance costs, tax costs, interest rate costs, etc. You deduct those, you have your net income, and you set that off against the purchase price, and you know what your return is. If the return is too low, don't do it. And often that will be the case when buying a house for renting out.
What are some of the traps that people should really avoid when they become a landlord?
Well, once you do your first purchase as an investor and you become a landlord, for me, you're still a little bit considered as a non-professional, meaning that you might not already be able to keep your emotions at bay and you still buy based on emotions instead of return, meaning that, oh, this is a nice apartment. I'm sure that my tenants would love living here, rather than, okay, but I've looked at the market for this kind of two-bedroom apartment, 70 square meters. I can ask €1,000 per month. So you have 12,000. You deduct your costs, and then actually you see what you need to pay. Once you have your yearly net rental income and you divide that by the return that you want, whether it's 4%, 5%, then you can actually get the price that you should offer for the apartment or for the house. And that's as a beginning investor, emotions might drive you a little bit more than the return, but the focus should be on the return. And what you often see is that when houses or apartments are being sold for rental purposes, that people do magic with the returns. They say, well, the gross yield or the gross return is 5, 6, 7%, but gross does not mean anything. At the end, it's your net income that counts. You need to take into account your maintenance, your insurance, your fiscal taxes, your vacancy. You can buy a very old property and you might get a nice gross return. But at the end of the day, if your maintenance is very high, that will impact your net return. So that's also something that you should take into account as a starting investor. Estimating these costs can be difficult, so you might want to get informed or find somebody that can help you find your way in this market. Third, location is very important. Know your market. Invest in an area that is important, closely to schools, to other public buildings, etc. And take into account, depending on the country you're in, the judicial aspects of co-ownership. If you go for an apartment, as I already explained before, you're in a large building, you need to take into account the others. So look into those judicial aspects. Look at the energy certificate. I don't have to tell you, after Ukrainian crisis, energy certificates gained importance as energy costs went up. You can buy an apartment very cheaply, but if you know you need to do renovations to increase the energy label, then you're also again in co-ownership. Can you do the renovation works? Are they allowed in the building, etc.? So these are things that you should take into account.
Do you think that this will drive prices down very hard, these energy certificates and the old buildings, I suspect will have to be sold rather quickly at some point?
Yeah, depends a little bit on your market. If your market has a fairly limited amount of older buildings, meaning they've always kept a little bit track of the evolution. I can only say, for instance, in Belgium, we have a very old stock of real estate. I mean, 70% is older than 20, 25 years. So we have a relatively old stock. Then it does impact your real estate market because you can say, okay, if the offering is is low and demand decreases, but demand is still higher than the offering, then those prices will maintain for older buildings. But I think in most markets, the large bulk, or at least half, will be older buildings, and I do believe that will have an impact on the value. I think people will look at their purchase now, saying, "Okay, I need to pay this much, but I know that I will need to put aside an additional amount for changing the windows, adding additional insulation, etc." So I do think this will have an impact on prices, especially now that interest rates have gone up and it's a little bit more difficult for people to buy. I think that will have an additional impact, the energy label.
From everything you say, I just understand also that real estate or managing real estate demands much more from you as an investor than if you were just to hold stocks or bonds. Why would I still be considering real estate then?
Yeah, true enough. I mean, it does require follow-up, repairs. You might want to look for new tenants yourself. At the end of the day, everything can be outsourced. You can certainly find a partnership with somebody that wants to do that for you. But yeah, that brings along an additional cost, which impacts your net return, etc. At the end of the day, should you invest in stocks, in bonds, or real estate? The difference is it's like comparing apples with pears. It's very difficult. I mean, if you look at stocks and bonds, they're very liquid compared to real estate. Today you have stocks, you want to sell them, and 2 minutes later, if you're in a liquid market, you can sell them. Not a problem. Real estate is a little bit illiquid. If you want to sell your property, you want to buy, it takes a little bit more time. So you have that illiquidity aspect. The other hand, stocks and bonds, it's easier to spread your investment. If you have an amount of 200, 300K and you make a choice between real estate, stocks and bonds, well, it's in terms of spreading, you're better off with stocks and bonds. Real estate, it's one asset on one location, so you do have a concentration risk. Then again, real estate is a little bit less volatile than the stock market. Depending a little bit on the country where you're in. There are a lot of stable countries, very stable countries such as Germany, Austria, France, Belgium, and then a little bit more volatile countries such as the Netherlands, Spain, etc. So it does depend a little bit on the country you're investing in. But in general, I would say stocks are a little bit more volatile than real estate. So real estate could be seen as a little bit more of a stable investment. And on real estate, you do have the advantage of leveraging. You can buy real estate with those 10 or 20% that we mentioned in the beginning. And stocks and bonds, well, there are ways to leverage, but in a certain way, you still need the money. You cannot leverage endlessly unless you're confronted with a great risk. So, in that sense, in terms of volatility and leveraging, I would say go for real estate. If you go for liquidity and spreading, then go for stocks and bonds. Always the possibility to go for both and to invest, for instance, in a REIT, which also has a very nice spreading, and it does take out the equation, the concentration risk.
Maybe you already answered part of the question. So would you recommend that people actually become landlords?
Personal choice. You want to invest in real estate and you want to be in control? Buy your own property. If you say, well, control is not very important. I believe in real estate, but I'm not into doing the entire follow-up, etc. Then go for stocks. But at the end of the day, one thing that also should be taken into consideration: real estate is a physical, tangible asset. Stocks and bonds are not.
In recent months, or in recent years, actually, I've seen a like a bunch of innovative products coming onto the market around P2P lending, also very often involving real estate. They're really all across Europe. Have you already been in touch with those types of products, and what are your thoughts on those?
Yeah, I think they can offer you a very nice return, but they do offer some kind of inconveniences. Namely, like you're very dependent on the other party, which you might not know, which might be a party that is not yet very professional. So that's definitely something to look at. If you grant the loan, is it used for one asset, for multiple assets? Then again, we come to the liquidity and concentration risk side of assets. But I think, yeah, it also comes down to control. You have no direct control over the assets, whether they need to be sold. So if you do that, don't get blinded by the nice returns, and look at what's behind, and how is the one requesting the loan, how professional are they, how experienced are they, how is their management, and what will they be investing in. I think that will be a very important thing to look at.
Any last piece of advice, or any specific things you still had in mind but didn't yet fit into any of the questions here?
Yeah, I think maybe in general, real estate is a very interesting business. I think it should be part of any portfolio, whether you do it through stocks or direct purchase, that's up to you. But I think it does have a place within an investment portfolio, and I think it's a very personal choice of which should I do? Should I go for stocks, physical purchase? Should I go for P2P lending? Everything is possible. Everything has its advantages and its inconveniences. Look at it. Look at the liquidity. Look at the concentration risks. Look at the experience of the management if you don't purchase it yourself. If you do purchase it yourself, and it's your first purchase, do ask for professional advice. Look at the return, not only the gross return, but also the net return. Make your calculations and leave your emotions at bay.
Thanks, Tim.
No worries. Good luck, Thierry.
So this concludes the second part of the interview I had with Tim. If you'd like to have more information on real estate for private use, also make sure to check out the video that I linked to this video. Are you willing to become landlord? What are your thoughts on that? Let me know down in the comments. Like always, thank you so much for watching. If you like this content, subscribe, and I'll catch you in the next one. Cheers!